Ladies and gentlemen, good day and welcome to Powergrid Infrastructure Investment Trust Q3 FY26 earnings call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Kumar from ICICI Securities Limited. Thank you and over to you, Mr. Mohit.
Thank you. Good morning. On behalf of ICICI Securities, we welcome you all to the Q3 FY26 earnings call of PG Invit. Today, we have with us from the management Mr. Naveen Srivastava, Chairman, Mr. Sanjay Sharma, Director, Mr. Amit Garg, Director, Srimati Neela Das, Chief Executive Officer, Mr. Gaurav Malik, Chief Financial Officer, Mr. Svetank Kumar, Company Secretary and Compliance Officer. Without much delay, I will now hand over the call to the management for the brief opening remarks, which will be followed by Q&A. Thanks and over to you, sir.
Thanks, Mr. Mohit. Good afternoon, ladies and gentlemen. On behalf of Powergrid Uchaha Transmission Limited (PUTL), the investment manager of PG Invit, I am delighted to have you all with us for a PG Invit Q3 FY26 earnings call. Thank you for taking the time to join us today. I, Naveen Srivastava, Chairman of PUTL, and I am joined on this call by my colleagues from the board and senior management of PUTL. Shri Sanjay Sharma, Director of PUTL, Shri Amit Garg, Director of PUTL, Srimati Neela Das, CEO of PUTL, Shri Gaurav Malik, CFO of PUTL, and Shri Svetank Kumar, CS of PUTL and Compliance Officer of PG Invit, along with other senior officials from our team. We truly appreciate your continued engagement and confidence in PG Invit. Before we move into the financial and operational details, let me briefly touch upon the recent developments. Parley Power Transmission Limited, PPTL, one of the SPVs of PG Invit, has been executing a project 400 kV line bay at 765 by 400 kV Parley new substation for RE interconnection under regulated tariff mechanism. This project was allocated by C2IL. I am pleased to inform that PPTL has successfully completed the project within the timelines stipulated for the project, which was charged on no load basis on December 31st, 2025. The tariff of this project will be determined by Central Electricity Regulatory Commission in accordance with the applicable regulations. Yesterday on February 9, 2026, PG Invit announced its financial results and quarterly distribution for the period ended December 31st, 2025. The results together with the investors' presentation have been made available on the stock exchange platforms and also on our website for the benefit of investors and the public at large. I am also pleased to share that PG Invit's investor base continues to expand steadily. From around 15,000 unit holders at the time of listing, we have grown to over 2.5 lakhs unit holders as on date. We sincerely thank our unit holders for their continued trust and confidence in PG Invit. For the benefit of those who may be joining us for the first time, allow me to briefly introduce the trust. PG Invit is an infrastructure investment trust sponsored by Powergrid Corporation of India Limited, India's largest power transmission utility, and a Maharatna under Central Public Sector Enterprise. Powergrid Uchaha Transmission Limited, PUTL, a wholly owned subsidiary of Powergrid, serves as an investment manager, while IDBI Trusteeship Services Limited, acts as a trustee. PG InvIT's portfolio consists of fully operational interstate transmission assets developed under the tariff-based competitive bidding (TBCB) framework on a build, own, operate, and maintain (BOOM) basis, and owned through 5 special purpose vehicles, namely Vizag Transmission Limited, Kalam Transmission Limited, Parli Power Transmission Limited, Varora Transmission Limited, and Jabalpur Power Transmission Limited, with 100% equity ownership in each SPV. Through these SPVs, PG InvIT has an operational presence across 5 states: Himachal Pradesh, Andhra Pradesh, Telangana, Madhya Pradesh, and Maharashtra. Collectively, these long-life revenue-generating assets comprise approximately 3,700 circuit kilometers of transmission line and more than 6,600 MVA of transformation capacity, and are backed by 35-year transmission service agreements. With an average remaining TSA tenure of about 27 years and availability-based fixed tariff under TSAs, the portfolio offers strong long-term cash flow visibility with limited regulatory risk. The assets have consistently delivered robust operational performance, demonstrating high system reliability, strong availability metrics, and an unwavering focus on operational safety. With Powergrid serving as both sponsor and project manager, PG InvIT remains strategically positioned to continue offering stable and predictable returns to the unit holders. Now let me come to the Q3 FY26 distribution update. On February 9, 2026, PG InvIT declared rupees 3 per unit distribution for the quarter ended December 31, 2025. This represents the third payout for fiscal 2026 and marks the 18th consecutive quarterly distribution since listing. The distribution will be credited on or before February 19, 2026. With this, cumulative distributions since listing stand at rupees 55.50 per unit, amounting to rupees 50.51 billion distributed to investors against the IPO issue price of rupees 100 per unit. We reiterate our commitment to a rupees 12 per unit distribution for the full fiscal year 2026. All distributions are made in accordance with the SEBI InvIT regulations and PG InvIT's distribution policy, which requires that at least 90% of the NDCF, that is net distributable cash flows, to be distributed to the unit holders. Let us now take a close look at our operational performance. Our transmission assets continue to operate with a high efficiency and safety with the support of our project manager. In Q3 FY26, based on provisional data, the average availability across all SPV exceeding 99.75%. This strong performance reflects the operational excellence while also maximizing the incentive potential. We are currently awaiting the final monthly availability certificate for the month of October to December 2025 from the respective regional power committee under Ministry of Power. Let me look at the financial highlights. For Q3 FY26, PG InvIT reported a total consolidated income of rupees 3,249 million, of which rupees 3,167 million came from revenue from operations and rupees 82 million from other income, primarily interest on deposits. Total expenses stood at rupees 1,177 million. The NDCF, the net distributable cash flow, for Q3 FY26 is rupees 2,614 million. We are pleased to confirm that the distribution amount exceeds the mandated 90% threshold in line with the SEBI regulations and our policy. On the capital structures front, as of December 31st, 2025, PG InvIT's outstanding external borrowing stood at rupees 10,661 million. That includes rupees 5,756 million loan raised from SDFC Bank in March 2022 and rupees 5,060 million loan again raised from SDFC Bank in December 2024 to fund acquisitions. Both facilities are floated rate loans, with one linked to the 3-month Treasury bill and other to the repo rate. The prevailing interest rates on these loans currently stand at 6.56% and 6.75% respectively. Our net borrowing ratio stands at 5.22%, providing significant headroom to fund future acquisition entirely through debt. PG InvITs maintain low leverage, giving us the flexibility to pursue debt-funded acquisitions. PG InvIT continues to hold the highest credit ratings, AAA with a stable outlook from ICRA, CRISIL, and CARE Ratings, underscoring the trust's strong financial positions, resilient cash flows, and prudent capital management. As of December 31, 2025, billed trade receivables were rupees 911 million, with an average collection period of 27 days, reflecting continued strong payment discipline from our counterparts. Going forward, our growth strategy remains focused on acquiring operational transmission assets in line with InvIT regulations and unit holder interests. However, we must acknowledge a key challenge, that is the limited availability of transmission assets for acquisition in near term, which we will have consistently communicated. The long-term outlook for the transmission sector remains strong, supported by an estimated rupees 9.16 lakh crores of the planned investment during the period 2022 to 2032 as per the National Electricity Plan released in October 2024 by CA. CA also published a master plan recently for evacuation of power from hydroelectric plant in Brahmaputra Basin released in October 2025. It emphasized an investment in the transmission system to amount rupees 6.43 lakhs crores, out of which 1.191 lakh crores up to 2035 and 4.52 lakh crores beyond 2035. These investments will convert into revenue-generating transmission assets, creating a meaningful pipeline of acquisition opportunity for PG InvIT once assets are commissioned and completed 1 year of operation as required under SEBI InvIT regulations. We are also actively monitoring monetization initiative at the state level. If state utilities choose to monetize their operational transmission networks, this could further expand the pool of available opportunities. However, such initiatives will require continued policy alignment, stakeholder coordinations, and may materialize gradually. As shared during our previous earning calls, PG InvIT is evaluating a new pathway for value accretive growth by considering participation in development of the transmission project under tariff-based competitive bidding (TBCB) mechanism. This initiative is aimed at leveraging the sizable pipeline of upcoming transmission projects, which are currently at various stages of planning and bidding. In this context, the Board of Investment Manager of PG InvIT and Powergrid has granted in principle approval for formation of a consortium with Powergrid as a lead partner and PG Invit as the other partner to participate up to 2 TBCB project with aggregate project cost of around 500 crores. Supported by strong fundamentals and a clear strategic direction, PG Invit remains well positioned to navigate the evolving transmission landscape. We will continue to pursue growth opportunities in a calibrated and prudent manner, always keeping unit holders' interest at the center of our decision making. Any potential acquisitions will be subject to rigorous evaluation, including operational track record, regulatory compliance, governance standards, and its overall suitability for inclusion with PG Invit. I want to thank you once again for your continued support and confidence in PG Invit. We look forward to engaging with you further during question answer session. Thank you, Mohit.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Palash Jain from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is on the distribution part. So what can we expect for FY27 and 28 in terms of distribution per unit?
At present, we are working on 26, and as we have committed that we'll give you 12 as we are doing in a same manner, and I'm sure that when the 27 will come, we'll surely declare that at that time. At present, we are talking about 25, 26, and that we have already declared rupees 12 per unit.
Okay, that helps. My second question is on the state's asset monetization plan, which you also briefed about. So can you just explain in a bit more detail, what is the plan? What do we have anything in the pipeline, or is there any credible progress on the same? And further, which states are we looking at?
No doubt it is having it's going on well, and with the Powergrid, and we are seeing that it's going to work. Let me explain you how we are going for that. It is why we have gone for that. Let me tell you first, because you all know that when we are going for TBCB, it should be 10% of your total assets, or PG Invit is having if you take 10%, it's coming out to be 800 crores, so we cannot go more than that. So that's why 500 crores we have kept it with Powergrid, and we are going we are keeping Powergrid as a lead partner, and we as a other partner. With our stake will be 74%, and their stake will be 26%, and it is in the process, and surely good results will come in that, and we see that in near future. At least presently we are going with the 2 projects, which is up to the 500 crores, and we see that in near future you will see that we are able to. It is in process.
Okay. Which states, if there is anything on that?
State monetization, we are in touch with the states, and we see that. You can understand that in ISTH is a limited acquisition opportunity, but apart from the private, some states also coming and thinking of monetizing their transmission with the capex. In this case, you all know that on December 6, 2024, CAS with the collaboration PG Invit and NIF and PFCCL organized a workshop to monetize their transmission assets in New Delhi, and almost 20 states representative have participated in that, and we see that if state level monetization, it's going to gain the transaction and could create a new opportunity for PG Invit. But basically, it's a policy decision involving various factors. We anticipate that procedure may take time to materialize it, but we are on the job.
Okay, got it. So my last question
Palash,
is,
just to add, we are in touch with some states, but I think it's very preliminary levels of discussions, and the states would not like us to name them. But yes, we have given presentations both in the CA platform and at other forums also.
okay, sir, that is very helpful. So my last question is regarding the consortium with Powergrid. So we expect to bid directly for the transmission projects in the next 12 months, in the near term, with Powergrid?
We will, both will quote in that. With the Powergrid will quote in that.
Okay, thank you so much, sir.
Thank you. The next question is on the line of Vipul Kumar Esha from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question pertains to this, our joint venture with Powergrid for acquisition of transmission assets. So have we submitted any bids for this, or it is still in work in progress?
No, you are talking about monetization, or you are talking about the consortium which we are making?
No, you have made a consortium with Powergrid, right? And you are bidding for transmission assets up to 500 crores. So what is the progress on that? Have we put any bids? Where are we in that journey, sir?
Let me tell you, in principle approval Powergrid has given, and we see that we are working on the modalities and finalization of agreement. And in parallel, we see that project will be approximately 74% will be from Powergrid side, and 74% from PG Invit, and 26% from Powergrid, and it will be a lead partner will be Powergrid, and we will be the second partner. And the project which is 500 crores and less, we will be actively participate in that, and we see that debt equity ratio will be projected based decisions. We'll see that at that time what is there. Further details will be provided once it is closed up. It is in the process, and it is surely the project will be prominently financed through debt and with a minimal equity outlay.
So should we assume that in next financial year you will start bidding in that consortium?
Hope we should hope we surely will come out of it.
And sir, if we do not add any assets to our portfolio, from which year our distribution will have to be reduced from 3 to whatever figure it is. So if you can throw some clarity, investor will be it will be very helpful to the investors, no? Because unless you add assets, this distribution cannot be maintained.
See, once of all, let's go in a positive direction. We are already in for FY2025-26. We have given rupees 12 per unit for our distribution, and the management has see that the distribution are going what we have decided for FY26, and we are going with that. Already 3 quarters we have already declared, and we are expected for that also. And under TBCB bidding, we may expect some more good results in that. We may get good project also in that. We see that based on the tariff pattern of SVU outlined in the final offer documents, there is a visibility of decline of revenue from 27-28. But we are sure that by putting it this way, as we are going in, monetization, or we are acquiring some assets, or in this consortium, we'll see that we'll move further. And with lower tariff-linked income, the NDCF may reduce, which in turn, if it is not coming up in that per unit. But we cannot comment how much it is going to come down. But there is sure that if we are able to get these projects come out, then we will be in a positive direction.
No, means we don't feel any urgency on the part of the management to arrest the decline or to add the assets, because it is, I think, you have listed for more than 4 years now, no?
Yeah, I'm telling you that PG InvIT is proactively pursuing suitable acquisitions opportunity, and we are addressing that part also. And we have, in my statement also, I told you what are the things. I can tell you now in the 5 better way, if I can tell you. One is, I tell you, NEP has told that 9.1 lakh crores project is going to come. Then Brahmaputra Basin, which is also 1.191 lakh crores, this is also going to come. There is a opportunity. CA is also looking after that. The intra-states, assets will be monetized and will be taken by us. Then we are making a consortium with Powergrid for the 500 crores projects. So these are the areas where we are working hard, and we'll see that the things will be in a movement in direction, and we see that we'll get some good results. We are also worried in that because in 27, 28, if it is little bit go down, but we have to see that we are continuously coming up that, and we normally don't jump into the deals straight away without checking the right boxes in terms of asset suitability. Otherwise, it is easy to get into that, but we see that it is beneficial to us. So we are on the job.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Thia Rajan M, an individual investor. Please go ahead.
Is there any possibility to increase the dividend from 12 rupees to 15 rupees? Because from investor perspective, we don't have a price appreciation for last several years. So in case if you have any confidence in saying that we can increase the dividend from 12 to 15 in future, then that will be a good. And another question is, should the PG InvIT should concentrate only on the transmission line projects, or can they come with new initiatives like some other solar plant or something else related to power generation to add some additional income, so that investors don't worry that there is no reduction in income?
As far as I'll come to the second question first, that the strength of our project managers is transmission business. So we now, as of we intend remain focused on the transmission projects also. But it is not mandatory that it's only transmission. We can go for other generation projects also. And we see that as we are evaluating the possibility of diversification internally, and when the right time comes, we'll surely tell you that other than transmission projects where we are going. And secondly, as far as the dividend is concerned, I feel 12 rupees at present we are giving you, and I'm sure it's one of the good dividend. And we have to see that our NDCF also, we have to based on that, we are as per 90%, as per SEBI guidelines, but we are giving more than 90% also. So we are giving the maximum at present. We are whatever we are, and we see that if it is future there will be any change in the revenue, we'll surely see to best part in that we can give.
Yes, we want the change in revenue on the positive side, not decreasing of anything below 12, for sure.
Okay. No comments on that. We agree with you as an investor.
So Arjunji, if I may just supplement what the chairman sir was referring to. Actually, these assets that we hold are the TBCB, assets won under the tariff-based competitive bidding route, wherein the revenues are fixed for life. For over 35 years, we have the revenue fixed. So there is no scope of organic growth per se in these assets, but for some small RTM assets, regulated assets, which are being given to the licensees, as we have got in Kalam and Purley. The only way, as the chairman sir told, to increase the payouts is the future acquisitions, for which the sir mentioned the various areas we are looking into, be it the 9.16 lakh crore of pipeline, a transmission projects pipeline, or be it the Brahmaputra Basin, or be it a joint venture consortium with Powergrid, or the intra-state assets, which the states may be, willing to monetize. So rest assured, a jump from 12 to 15 is too much of a ask. Uh, Under the present portfolio of assets, it might not be possible. The only way will be value equity future acquisitions, and we are on the job for that, sir.
Okay, thank you very much. One last question. Regarding that transmission sector, NEP transmission 9 lakh and 1.9 lakh, how much potential the revenue could be for the PG InvIT, because currently 1,100 crores or 1,200 crore is the per year profit. So if this materializes in other 5 years or 10 years, how much revenue could be on a percentage basis improvement in the current 1,200 crores profit, net profit?
I cannot.
Too futuristic a question, sir. I mean, these projects are under the planning stage. They have to see the light of the day first, and the revenue will be discovered mostly through the competitive bidding route. That is to begin with, and after that is over, then comes the role of structures like Innovate, who will be out there in the market scouting for the acquisition of those projects. So long distance to travel yet. I mean, it will be too wild a guess to give at this juncture. So yes, we need to wait for some time for the more clarity to emerge.
Okay, thank you for your kind answers.
Thank you. The next question is from the line of Vijay, an individual investor. Please go ahead.
Yeah, hi. Am I audible?
Yes, yes.
Yeah, hi. I'm a bit new as an investor to PG InvIT, and my understanding is a bit basic, so my question might sound a bit basic, but as it was mentioned in the earlier question answer to that all your 5 SPVs are under TBCB where revenues are fixed. But when I see your FY25 valuation report for 3 of your biggest sort of SPVs, PPTL, WTL, and JPTL, the revenues in FY28 declined by roughly 30% each, right? So my first question is on the line, like, what am I missing here? Like, what are your tariff contracts, or is it like part of the contract that you have? Like, these revenues are supposed to decline? So yeah, first question is that.
So Vijay, when we said that the revenues are fixed, it does not mean that whatever we are getting, say 100 rupees, we will continue to get 100 rupees for X number of years. By fixed revenue, we mean that whatever has been quoted at the time of bidding, say in the first year I will be getting 100, then 90, then 80, then maybe 110 or whatever it is. So whatever amount has been quoted will remain fixed. So it is so happening that during the fiscal 27-28, the revenues are declining. So that is the quoted amount, and that is the amount adopted by the regulator, CERC. So there is no deviation as far as the top line is concerned for the revenue part.
Oh, okay. So your contracts or tariff contracts are made such that these revenues are supposed to decline, right? And these will largely be for all 5 SPVs.
Right, sir. Right.
Okay, so in addition to that, my second question is that if you assume that no acquisitions materialize by FY28, and with these revenues going down and obviously with costs increasing, so NDCF would ultimately decline. So that means that ultimately your NDCF would come down a lot, and you won't be able to sustain 12 rupees distribution that you're doing per annum, right? If we assume that acquisitions do not materialize from here.
So why we are taking in this negative that acquisition will not occur? Okay. Of course, if it is
it has not happened for many years now.
It will decline. It will decline. There is no doubt in that. But we should not think in that direction. Yes.
Okay. Got it. Thanks.
Thank you.
Thank you. The next question is from the line of Nidhi Shah from ICICI Securities Limited. Please go ahead.
Yes, thank you so much for taking my question. So, firstly, on the potential projects that are available outside of transmission, are we looking at any other projects?
Our focus is not transmission project, but yes, we are seeing the possibility of diversification in other areas also. We are thinking and we are putting our efforts in other assets also.
Would you sort of tell us what kind of assets you're looking at, whether it is strictly in the space of power, or you would be looking at assets outside of power as well?
It's in power only.
It's
in power only.
All right. And my next question would be that has there been any progress on this side? As in, are there any other assets that you think that you can take up from states that are not transmission or from other private players?
We are in touch with private players also. When it will come out in a concrete way, we'll surely come out with those whatever we are thinking of. At present, in the very initial stage.
Madam, but as we mentioned in our earlier calls also, we have always been scouting for opportunities, whether in the private sector. But if you remember, that in the ISTS side, there are very limited opportunities available, because most of the operational assets are either with the long-term holders, and what we are having a visibility for the new assets that may come up in the next 2-3 years, because of the huge pipeline of investments going into the transmission business. And as far as the states, we have already mentioned that we have been in touch with the government, we have been in touch with the states, and whichever states is intending to raise money through any modes, asset monetization through InvIT is one of the things that we are trying to pitch in.
Are the states receptive of say giving out projects that are say renewable, like solar and FDRE wind projects, to a company like yours?
Ma'am, currently when they talk to us, they are strictly focused on power transmission assets, because Powergrid being the project manager of PG InvIT brings a lot of expertise in terms of operation of assets, and that is what one of the competitive strengths of PG InvIT is. So on the state side, the discussions are only on the transmission assets.
Okay, all right. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Amit Maheshwari from M Capital Advisors. Please go ahead.
Hi, sir. Good afternoon. So my question is, in terms of if we look at the FY28 revenues, there is a potential loss of almost about 290 crores of revenue decline. Now, in terms of this, is there any cost savings or cost saving initiatives that the company is implementing or sees a potential to offset some of this revenue loss?
Amit, if you can look at the numbers, you would see that the EBITDA margins are already very high in these projects. So with these kind of margins, the cost-cutting opportunities are bare minimum. We presume that we are one of the most efficient structures currently in this segment, and don't foresee any cost-saving initiative, something to adjust to the tune of 290 crores. I would request my colleague Amit also to share his thoughts on this.
Correct. As Sanjay rightly pointed out, that we are one of the most efficient player in the market. You can compare our financials with that of any given listed entity. I will refrain from taking any names, but that is for you to have a look. So when you are already at that much of operating at that much of a efficiency, so to bring further efficiencies is really difficult. The only manner to increase the revenue is the asset acquisition. Opportunities on cost reduction sides are very, very limited. So yes, acquisition is the only way to go forward.
Okay. And in terms of acquisitions, are we in discussions with any advisors, investment bankers, or someone? Is there someone that the company has looked at either formally or either on an exclusive basis or a non-exclusive basis in terms of mandating? I don't need the names. I just
those are
want
the things. Those are the things internal to PG Invit. Yeah, we have been on the job, and they are advisors whom we interact with. But obviously, those things cannot be shared on a public platform like this. Yeah.
No, I don't need the names. I just want to understand if the companies, because you you say that you're. I mean, we hear the commentary from the management that you're serious. This is just a way to understand how far advanced we are in the process, and sort of also gives a sense of the seriousness, right? So I'm just trying to understand that. Yeah.
Okay.
Thank you. Ladies and gentlemen, we take that as the last question of the day. And now I would like to hand the conference over to management for the closing comments.
Thank you, Mohit, and your team, and a sincere thanks to all the participants for joining today's earning call. We also extend our sincere appreciation to all the participants for joining today's earning call. Your continued engagement reinforces our commitment to maintain transparent and meaningful communication with our investor community. At PG Invit, our vision is to build a focused and resilient business model, one that prioritizes operational excellence, pursue value accretive growth through strategic acquisition, and maintains an optimal capital structure. These pillars are designed to deliver predictable, stable, and visible long-term returns to our unit holders. Thank you once again for your time, trust, and confidence in PG Invit. We look forward to continued engagement with you. Thank you very much.
On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
Thank you.